SpaceX's shares are down in late trade despite the revenue exceeding estimates in the company's first earnings report after its mega IPO in June. That came in at $7.8 billion for the last quarter. CapEx jumped to about $18.4 billion. Bloomberg's Danny Lee joins us now for more. And Danny, really, this was really due to investor alarm over how much spending is going into the AI side of the business. Unsurprising, though, given how Elon Musk's been viewing this company.
Yeah, well, SpaceX has always positioned itself before the IPO and now continually as an AI company. And so this very heavy levels of spending that the company is having to push through just to fulfill its ambitions and also some of the kind of clients it has as well. So yeah, for investors, that puts the shares under more selling pressure after having fallen like over 50% at least from its peak only a couple of months ago. So yeah, again, more pressure. But when you do, as you said, look at the earnings, it did much better than expected on the revenue and on sales. And just ultimately the business units are all performing better. We still only have the Starlink business, the connectivity side, which is the cash cow and profitable, making money. But interestingly, even on that kind of business, subscribers fell light. But there's just that focus on the capex number of 18.4 billion. That really is just weighs on the company.
And that focus is likely to continue, right? That scrutiny, because so much of these ambitions of data centers in space are largely unproven.
Yeah, I mean, SpaceX does have a lot of ambitions, for example, putting data centers in space. But yeah, even when you come to the likes of CapEx, the fact that that level of spending is going to continue for another couple of quarters. But still, as they look to improve other sides of the business, even for Starlink, they're looking at ground-based infrastructure to complement its satellite businesses. And even then, the fact that it is selling compute capacity to other major tech players, that is providing genuinely good revenue that will flow through the business and help the finances and economics of the business going forward. So yeah, at least investors did get to see a little bit more from this company than it previously has done.